Oil cooled down, stocks moved up, and Wall Street got a little bit of hope from geopolitics. Hey everyone, it's Friday morning, May 22nd, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. So, U.S. stocks ended yesterday slightly higher, helped by reports that the United States and Iran may be moving closer to an agreement, apparently with Pakistani mediation. The mood improved after Secretary of State Marco Rubio said there were some good signs that a deal to end the war in Iran could be in sight. Now, he also said he did not want to be overly optimistic, so this was not exactly a full green light. But still, for markets, even a small sign of de-escalation was enough to support risk sentiment. The Standard & Poor's 500 rose by 0.2%, while the Nasdaq Composite gained 0.1%. The Dow Jones Industrial Average had a stronger day, rising 0.6% and closing at a record high. Oil was the big story again. Prices had moved higher earlier in the day after Iran's supreme leader reportedly said that the country's near-weapons-grade uranium should not be sent abroad. That raised doubts about how real the peace progress actually was. But later, oil prices cooled. Brent crude moved back to around $104 per barrel, while West Texas Intermediate fell below $100 again. The reason was renewed hope that a deal could be announced soon, including a ceasefire and safe passage through the Strait of Hormuz. Meanwhile, investors also kept digesting Nvidia's earnings from Wednesday evening. The company beat expectations on both revenue and profit, and it gave an upbeat outlook for chip sales. But well, when expectations are already extremely high, even strong numbers can sometimes feel just a little bit short of what investors wanted. And then we had Walmart. Walmart reported strong results for the first quarter of fiscal 2027. Revenue rose 7.3% year-over-year to $177.8 billion, which was better than expected. Net income jumped 18.3% to $5.5 billion, and diluted earnings per share came in at 67 cents, up 19.6% from last year. A key driver was e-commerce, which grew 26%, helped by pickup, delivery, and marketplace activity. Walmart also confirmed its full-year guidance, expecting revenue growth of 3.5% to 4.5%, adjusted operating income growth of 6% to 8%, and adjusted earnings per share between $2.75 and $2.85. So, bottom line, markets liked the possibility of less geopolitical tension, oil cooled off, Nvidia was strong but not quite strong enough for everyone, and Walmart showed that the U.S. consumer is still spending. Alright, that's it for today's Capital Markets Quickie. If you found this helpful, hit subscribe and stay in the loop. See you tomorrow morning.